Hello and welcome to Wyckoff Training Academy. This is a video wherein I would be discussing about Wyckoff based tools which I have developed for Wyckofian traders or for people who are trading based on Wyckoff methodology. So let me put it in this way that this is or these tools are a bit advanced. So they are not for the people who are beginner or who just want to uh, uh, or you can say have the tools which can one second, let me set the color. No, let it be green is always also. I'll keep it orange or I'll keep yellow. That is good. So this tool is advanced and it is specially meant for Wyckoff traders or people who do price and bar volume analysis or price bar volume analysis, which is in like which was developed by or which was introduced to at least to me it was introduced by David Weiss, the late David Weiss. So this is we'll go one by one and I'll try my level best to explain it in a shortest video, though it is a detail. These are all detail indicators, so they require a detailed explanation. I already have many videos made on based on this one. So we'll begin with we have what we are looking at the chart is like this is a tape reading toolkit version 155, which was developed based on the principle of Wyckoff. That is, if price is increasing, that is a markup phase is going on. So we want to see uh, demand should be greater than supply. If prices are falling, that is a markdown phase. Markup phase is an uptrend and markdown phase is a downtrend. So Wyckoff has identified a uptrend and downtrend as markup and markdown phase. So when the markdown phase or downtrend is going on, the supply should be greater than demand. This is one of the principle of Wyckoff. So Richard D. Wyckoff. So I have developed a trading tool based on this one. This tool is basically one second. Let me change the chart. Actually, it was requested by one of Wyckofian trader who has joined my one of my group. So he's trading S&P 500, that is SPY ETF. I think this is the instrument which he is trading. So basically, what I'll to be very precise and very like short in a 15 minutes time frame or like in this video of 15 minutes or 30 minutes, I'll try my level best to explain what has happened in this particular price action and why price went down according to this tape reading toolkit and what we can analyze and how should we interpret this. Basically, first of all, this was the basic chart which I used to follow, that is bar chart. I always follow bar chart. I don't trade based on uh, candlestick because they never resonated with me. And though I initially started with candlestick, but David Weiss has introduced this concept to me. So I started working on price bar, that to black color, and to to keep the unbiased, like, or for keeping my approach to be unbiased. So based on his teaching and all the volume and demand supply studies of Wyckoff, I created this 155 version that was called as tape reading toolkit. So what is a tape? Tape reading is something, it's an exercise wherein as soon as the price is released or price or and any contract or any like for example any executed order, to be precise, has been executed on any given price, that when the particular price is printed, it is called as a executed price. And based on this executed price or group of executed price, we do a tape reading. Tape reading is something, it's an exercise wherein we monitor each and every single price behavior over a period of time. So now over a period of time in the days of Wyckoff, there was no time based or time bound charts. So his tape reading was completely different compared to us, as we are having time based or time bound charts of starting from seconds to months and years, depending upon your data provider. So now, as I'm watching this SPY S&P 500 ETF Trust and New York Stock Exchange ARCA. So in this particular 5 minute time frame, I'll try my level best to explain you how I would read this price behavior based on this toolkit. So before that, what I'll do, I'll highlight one of the analysis dashboard, which is available or which comes along with this one. So first thing, when there is a green candle with a green triangle facing upward, that means supply is greater than demand. If there is a red candle with blue triangle, that means supply is greater than demand. If there is a green triangle or a blue triangle with green candle, that means there is a supply and demand imbalance. If there is a red candle with green triangle facing upwards, that means there is a supply demand imbalance. So when a demand supply imbalance or supply demand imbalance occurs, that means what we about to see is either ways, like if there is a supply demand imbalance, then supply uh, has a likelihood to supersede the future price movement. If there is demand and supply imbalance, that means a green candle with blue triangle facing downwards. That means demand would demand is has a high probability of superseding. Though it is an imbalance area, so uh, uh, making a bias that either price will go upward or downward from this particular point is kind of a speculating kind of a thing. So after that, we have a hollow candle. That means a black candle, because this tape reading toolkit was made for first for my trading. That was I made it for price bars, but later on, I got many people who were trading based on candle and they don't know how to analyze bar chart. So that's why I have kept it like if I change it to candle, you can see these candles are hollow. That means hollow candles. Hollow candle with orange triangle upward, that means weak demand or expected upward price flow. So if we see for price bars, it would be black. If a black candle with orange triangle up facing upward means weak demand or expected upward price flow. That means if there is an upward, this is a weak demand bar. So either price is expected to go, this should be the interpretation, or either there weak demand itself means that if we are coming down and demand is weak, that prices are going to go downwards. So in the same manner, if there is a weak supply, that is a black candle or black bar or a hollow candle with a red triangle facing downwards means a weak supply or expected downward price flow. So either this is a weak supply, that means we would see a price bounce from this particular point, or either the other interpretation would go is like prices are going to go downwards because supply is weak, or like supply is weak, so prices are going to go upwards, or expect or there would be free flow of price towards the downward side. So after that, I have coded a no demand or a no supply bar, which is normally a white color bar. And this is my observation. This is one of the wonderful and excellent. Uh, this is my baby, like I can say. I have over a period of my observation of like 17, 18 years. I have I've seen this price bar to appear. Whenever it appears, there is either a trend change or price will continue its previous trend. So we will see this in action from this particular point. I will keep this dashboard. Uh, I'll try my level best to keep it available so that I should be in a position to see the bars also. Okay. So now I have hidden the this one indicators tab. So we are starting from we are going to observe this particular price action. So what has happened in this spike from this particular point? We were approaching downwards. there is supply greater than demand, supply greater than demand. We have a demand supply imbalance bar. Let me zoom in so that you people are able to see this thing. So as we can see, as you once again, I'll make it in this. So what has happened over here? We can see we were approaching downwards. Price is coming down. Let me change the color to pink. Blue would be good. So we are approaching downwards. This supply is greater than demand, which you can see a red candle with blue triangle. That means the supply is greater than demand and we are approaching downwards. As we are approaching downwards, you can see demand supply imbalance. So if you are not this analysis dashboard is for initial is for initial purpose. Once you know what the candles are doing and what their interpretation is, you can just do come into this thing and just uncheck this one. So another feature which I had added into this one is you hover your mouse above the triangle, it will tell you what this particular interpretation is. Like for example, for downwards triangle, you just this is telling us supply. That means supply is greater than demand. Here you can see demand supply imbalance and trend change. So you can just hover your mouse over or bring the mouse over the tip of the triangle. You will come to know about this one, what has happened. Only in case of yellow and white bars, you have to bring it on the high of yellow candle and it will tell you this is a trend continuation or a price continuation kind of a candle. So as we are approaching, what would be my interpretation? As we are approaching downwards, we got supply demand imbalance price bars. So this particular 5 minute or 10 minutes candle or 5 minute each that equals to 10 minutes. In this 10 minute, we are approaching downwards, but the size of spread is also decreasing, and as well as the candle has shown us that there is a supply demand supply imbalance because it is a green candle with blue triangle. That means it will it is we would identify it as a demand supply. So what is the likelihood when this kind of candle presents itself? So there is a likelihood that demand would supersede or demand would overcome supply. So when demand will overcome supply, we would see a price upward movement, and that is what has happened. So this two candles are followed by trend change candle or a price continuation. Like you can see, if you bring your mouse above the high of yellow candle, it says trend change or price continuation. So what in this particular case, we are coming downwards, a trend change, or in this particular case, price is progressing. So in this particular case, in this particular micro phase, the trend change would be subjective or subjected to downward price move. So from this particular point, price move downwards. As we are up this particular in this particular context, like in context of its two particular bar, price is going downwards. So what does this trend changes or trend change or price continuation means? Either the price will start falling downwards or trend change means this particular 10 minutes downtrend is about to change and it will go in opposite direction. So out of two, one thing will happen and it was clear we got a demand bar. You can see in this throughout this price action, apart from this one, we got first demand bar. That is demand green candle with green triangle facing upward. That means it is demand greater than supply. So I've mentioned demand because I don't want to make it a bigger level over here. So and after that, that is followed by a weak supply and effort versus result. That means there is an effort in this particular price action to take the market downwards, but the result, or in this particular price action, it was the effort to take the market upwards, but there was effort was the result. That effort was towards upward side, but result is negative. So negative means the result is downward. Prices are going downwards. So after that, we have instant gratification. That is another demand bar, or you can say demand greater than supply. If I hover my mouse or keep my mouse above this one, you can see all the supply, residual supply was eaten away by on this one. And as this yellow bar means either a trend change or price continuation. So this particular at this particular point, giving the context, we are approaching downwards. We got supply demand supply imbalance. That means demand would supersede. Then there we have two trend changing scenario and no supply. This is a weak supply kind of a bar. If I hover my mouse over below this triangle, weak supply. So this context overall it makes easier for me to understand and analyze. Now we are going to see a price upward stride, and that is about to take place, and it happened. So, in a nutshell, all this price action has been, what do you say, like this was the resultant of all the activities which was taken place over here. So for me, this is a accumulation, because accumulation, I don't go with phase analysis because that is not practical, and that as per my understanding, it's not practical. I don't know about other people who are following it. If you're following it, then it's well and good for you. But for me, is an idea of exchange of hand taking place between supply and demand. So the supply came into existence from this particular point, as this demand was resulted into weak demand. As I mentioned earlier, the hollow black candle with orange triangle means weak demand, and black candle with red triangle means weak supply. So here you can see there was exchange of hand taking place in all the contracts were eaten away, which were there bought, and later on the result was this one. So now I'll not get into all this nitty-gritty, because I think you can make out. Just watch over the idea that if prices go about to go upwards, whenever there would be supply, it would be eaten away. Like for example, we have a supply, a very healthy supply at this particular point. Who are the Wyckoff traders? We can understand what is the significance and why this kind of price supply has taken place, because this is the check, or you can say smart money is checking whether, or institutional or composite operators are checking whether there are still supply or supply is there in this particular market. So this widespread downward bar was initiated, and which was instantly, uh, this was the instant result which we got, that all the supply was later on converted into no demand. As you can hover keep your mouse about the high of this particular candle, not above the triangle, but on in case of yellow and white, you have to keep your mouse above the high of the candle, and you can see no demand or no supply. So that means in this particular case, the supply was towards downward side. So in this particular case, it will act as a, because no supply and no demand are contextual. You have to go with the context. So this is a no supply kind of bar. Again, we went sideways. We encountered selling obstacle over here. It did occur on the same area where there was first sell-off has taken place, and then which resulted in a no supply kind of bar, which is a narrow bar. I will not get into narrow bar because I don't want people to get confused, because this video especially for bar chart and people who are doing bar chart analysis. So this is a no demand or no supply kind of bar, but given the context, this is a no supply. Because it is no supply, I was expecting this kind of price behavior, which was followed by a weak supply. You see, demand has came into place, and then after that we have weak supply. What does this mean? This means all the supply which was here, which was a result of supply sell-off over here, was eaten away by this particular demand, and this was the last check whether, because as a Wyckoff that like being a David Wise student, we all know market has a tendency to check every time, whether a price has to change or composite operators, whatever you want to name them. They always keep on checking whether or there is always testing taking place in uh, uh, like over a period of time whenever this kind of behavior. So this is a reaccumulation of kind of thing. This is an accumulation for me. This is a reaccumulation because whoever has bought over here, they have either like profit taking was taking place and new buyers stepped in, and then this resulted in higher price. So after that, you can see as the top formation was there, you can see shortening of this taking place in terms of wave and in terms of bars. I think those people who might be watching this video, they understand what this all this what this SOT stands for. But the most interesting part is like as we are approaching upwards, we started seeing demand supply imbalance. Have we seen this kind of price behavior in this entire price move? That means something imbalance kind of thing is taking going to take place. And now, as we are going more sideways, this is the demand. This is the demand. We see weak supply. Now we are about to see imbalance again and supply greater than demand. Like if you hover your mouse over your supply, or if you hover your mouse above this one triangle demand. So I in either case, both the ways we are seeing there is a tug of war going between demand and supply or buyers or sellers. So if I holistically view in this particular price action, so what I come to a conclusion that whenever we are going upwards, we are immediately met with weak demand. Whenever we are trying to, or whenever the price is going upwards, that means we are facing weak demand. What does that mean? There is no ease of movement towards the upward side, and there is no price progression towards the upward side. Instead of that, we are either met with a supply bar, or either we are met with no demand bar, or either we are why no demand bar? Because it is in the given context of price moving upwards, and as we are approaching it, there is weak demand. And then if I see this was the last gut check. Now this particular if you see the yellow bar, this yellow bar is the continuation of price progression between these three bars. So in that given context, it says either there would be a trend continuation or either a trend change or price continuation. So based on my observation, what happens whenever this kind of bar happens, if there is a trend continuation, that means what is the trend? Immediate trend is the price progression from this particular price bar. So either way, the price will at least for a bar or two, price will go upward. This is what I have observed. Or either it would there would be a trend change. So we are on the play on in an area there was uh, demand at the beginning and later on at the end as the demand is going upwards or the price is pushing upwards, it is stalling and it is coming down, and the end result was this one, the you can say a yellow bar that is either trend change or price continuation, and which was later resulted in small price progression and upthrust, or you can say not a major upthrust but an upthrust. Though it is accountable for 5 minutes, it is like more than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That means more than 1 hour or so price action going sideways and an upthrust that resulted in downward price. So this is how I read this market, and I hope this video is because this tool is advanced. It is not for people who just want buy sell signal and this and that, because this is a very detailed tool. And once you start reading price action based on the way I have explained it to you, then trading it would be much more easier and logical and much more sensible for you. Consider this bar of 5 minutes to be a bar of like 1 day. You'll be in a better position to assess which side the market is going to go. This is a no supply. This is effort versus result. In the right context, we are coming downward. There was an effort to take the market upward, but the result was downward. That means all the price action which is about to take place would be downwards. Here also, we have seen like many people might have thought that this is a spring, but how spring fails in a downtrend. This is a very excellent example because you can see supply, and demand. So if this is the only demand, I would like to see price coming up, and if this is a spring, then I would like to see price coming upwards, and there should be no supply. Then I would be in a better position to initiate a buy, and this gives us a very low risk and high reward trading opportunities. Even like given the fact you should be in a position to understand. Look at this particular point. It automatically draws support and resistance line, which are helpful for traders who don't know how to draw market structure. So either ways, if you do any single like 5 minute, 1 minute, 10 minute, 15 minute, daily, weekly, monthly, any kind of time frame, this toolkit is very useful. It gives higher time frame uh, bars what basically is happening over the particular time frame because daily and weekly is subjective and data is not that much because for like due to the what do you say time zones and other things, the data of weekly and daily is not that much clearly available. So because of that, it like for example, this is the demand bar. This is the demand, and it will give you one candle information of to you. Like for example, if you're on a 1 hour time frame, your 4 hour would be like your 1 hour time frame is suggesting us 1 second supply. This is supply which was suggested by on in this particular box. So even if you are a multiple time frame analysis, top down analysis kind of a guy or a top multiple time frame analysis kind of a trader, so this would help you what is happening in the recent bar or previous bar will give you an idea of where the price would go. If there is a 1 hour supply, I would only look for selling opportunities, and if given the fact price should go in my favor. So I hope this. I'll stop my video at this one at this particular uh, point. And if you want more videos on this one, please, because this is a very exceptional tool which I developed for especially for Wyckoff traders and for my students who are learning Wyckoff. But it will take time for new people, but who know Wyckoff, it's a child's play for reading this market. And if I remove this one or if I hide this one, this is the though we a David Wise student, and knows how to read this price bars without this indicator. But when you apply this tool, it will you will under it is something wherein, like for example, you would this is a language of chart or language of market. So you're speaking in the language the chart speaks. So understanding what is going behind the or what is about to happen, it will be more clear to you. So I hope you people would enjoy this video, and please do share with the people. I never tell anyone to share the video, but this time I would say please share with Wyckoff traders so that they will understand there is a tool which will which will reduce their stress and which will reduce the how they approach the market by way of doing tape rating analysis. Thanks a lot for watching the video.